Welcome to Inner Circle Precision, and in this video I'm going to give you how you are going to approach the market using the iCT concepts. So basically a lot of videos are shared online on YouTube on how to trade using the iCT concepts, but you'd find yourself being very confused and analytically paralyzed. So in this particular case, what we are going to do is I'm going to give you something that you can use in your trading. So basically what you need to do when you come over the charts is to basically start by looking at the higher time frame. In this case, I am on the H4 time frame. I love to use the H4 plus a lower time frame, which is basically the M15 time frame. On the M15 time frame, that is where I would see a PD array in form of a fair value gap for my entries. So what do I look for on the higher time frame? Basically on the higher time frame, I look for structure. And in this case, we can see that on NZDJPY, which is this pair that we are looking at, we are going to the upside. We have a flow from this particular point. We had a flow, a pullback, another flow. If I'm going to mark the lows, this is going to be a low, and we have another low, and we have another low. So in this case, we are now looking for, in this particular case, in hindsight. And when we are looking in hindsight, it will be easy. But what I'm going to do, or what I'm going to teach you, is basically going to simplify everything. So when we actually break structure, like in this particular case, we had this particular law that was issued. And then after that law was issued, we had this liquidity or stop rate that was issued. After that stop rate, we are now in an upward trajectory. And in that upward trajectory, our goal or our mission is to basically locate or time the end of pullbacks. That is the goal of everything. So in this particular case, we can see that we had a shift that broke structure, and then we had a pullback within this huge fair value gap. But we are not interested in that. What we want to look for is what we call a bullish or a bearish engulfing bar play. So in this case, a bullish or bearish engulfing bar play is going to locate, or is going to provide us end of a retracement. So in this case, we wanted to see when this was actually happening, all that we wanted to see was a bullish engulfing bar play at the end. Or basically, if it presents, we actually dim that flow or dim that particular drop determination point. So in this case, we can see there was no the engulfing bar play, and then we had a rise. After that rise, we can see at this particular retracement, what did we get? We can see that we had a bullish engulfing bar play that was issued. How did we actually see it? We can see that there was this red candle, and this low of this green candle swept below the low of the previous candle, meaning that it was actually a bullish engulfing bar play. Then what do we do next after seeing this particular bullish engulfing bar play? We are not going to enter right away, but we are going to look for a PD array on the lower time frame. So I'm going to mark this particular point so that we can actually see this zone on the lower time frame. We switch to the M15 time frame so that we can see the point, right? So on the M15 time frame, what will we be looking for? We want to see the PD array for our entry. We can see that this is the period of the wall movement or the wall structure that was issued on the H4 time frame. So in this particular instance, what do we want to see? We actually mark, this was actually, we need to put it, it was on 7, right? In this particular instance, this we have these openings which are referred to as the fair value gaps. So we had this as a fair value gap 1, we had another fair value gap 2. So for the bullish engulfing bar play or bearish engulfing bar play, all that we want is to at least get a fair value gap in the 25% of the candlestick. Meaning that if this was the candle of that engulfed the previous H4 candle, we want to see at least 25% retracement to that zone and make an entry after we retest that particular or that 50% of that zone. Meaning this is where we want to make an entry 50% and we risk our stop loss right below the fair value gap and our take profit at twice or 1.5 R in that particular site. So let's go back on H4 time frame to see exactly how everything played out. So we can see that on the H4 time frame, this is how it looked like. We actually retraced at this point. You can see we retraced to 25% the floor, this candle, and then we actually exited at this particular point. Then the market started to trend to the upside. When we start to have a retracement to the floor that we are seeing, the next thing is to look for an engulfing bar play. In this particular case, we can see the market, it started to reverse, and when it reversed, what we saw was actually this candle. It was an engulfing bar play, but unfortunately, this actually failed and ended up as a stop loss. Then here we can see there was this candle that swept the low of the previous candle, and then the following actually started off at 25% of this bullish engulfing bar play like that. And then if we switch to the lower time frames, we can actually find a fair value gap in line with the trend. So to summarize everything that I've said, the first thing is to determine the structure of the H4 time frame, and then to time the retracement, the end of the termination of the retracement of the floor, and then after that we go to the lower time frame to find a fair value gap for our entry, basically like that. If you do so over a series of trades, you'd find yourself absolutely profitable. On that note, we've come to the end of our today's video. Thank you for watching, and check out the free Telegram channel. I'll leave the link in the description box below.